Alright, this is Jared with Learn to Win Trading. Just doing a quick market review for today. It's March 9th, 2010. We didn't have many signals happening for us on the S&P. It's been a slow, actually, about a week and a half. The volume down here has decreased quite a bit. I honestly don't know what is taking effect in the market causing the volume to be so low, but the one thing I know is the market goes through cycles. And you just have to kind of go with the flow with the cycles of the market. The other thing is when one market isn't giving you a decent rhythm or a good environment to trade in, you can look at other markets. So what we did today, we looked here at the S&P. The S&P was real choppy. This is my 2-minute chart. And it's just so tight with candles and so many little wicks but not a lot of movement per candle. So it makes it hard for our signals to be strong in a market like this. It gives weaker signals. So looking at again at a different market now, we've got the Russell 2000 here, the E-mini market, and the Russell is a neat little market to trade. I like to trade the Russell. With the pre-market volume or pre-market movement, we actually had a setup happening here where it kind of bounced off here, came in, created a little lower high. Our lower indicators are producing a TC showing strength for the long position, and it kind of jumped up again, and when the market opened right here at 9:30, it took off and broke this resistance level. Here would be a nice place to enter on this. Maybe the 1-minute chart would give you a refined entry point for this entry here, but when the market opened, it took off going up. And it's likely that in this rally we wouldn't have actually been in for most of this rally, but we would have capitalized on just this somewhere in this little piece, because what happens is our lower indicators start showing weakness in this trend. Any sign of weakness, it's preferred to get out, and just whether it continues to run like it did or not, just know that you've capitalized on the profit and you got out when you start seeing that, because your probabilities get reduced when you start seeing signs of weakness that the market's going to continue going its way. Today it did, but that's okay. This would have been a real nice entry for some of our students had they were they trading the Russell. I don't know for sure how many might have been looking at this. Another great trade happened later today in this, I'm going to have to shrink this down so you can see it, in this push going back down over here. Actually a nice signal happening in two places here. We've got, let me move that little sign there. We got a high and a lower high here. We've got this break in support and our signals confirming this. You could have taken a point out of that possibly. Had you held on to that a little longer, you could have ridden the trend going down. The one thing that would cause me to want to be cautious about this is that this lower low here. See, we've got a low and a lower low. Our lower indicators are producing a almost flat or higher low. That would have been a sign to possibly look at getting out. But regardless, you would have had a pretty nice profit on that before you would have had to get out. It would have missed this huge push down. You would have missed that. But that's okay. No strategy is 100%, but if you can trade the signals consistently, it's going to allow you to capitalize on profit here. In fact, the way I look at this is that our signals allow us to pick up the scraps. They allow us to identify where the big players are taking the market, and once we know where the big players are taking the market, we jump in and pick up here a point or two, and that's the whole goal with our strategy. That's all we need. Well, a point or two a day can make a pretty darn good living if you can do that consistently. Well, that's all, and have a profitable day.